Hello and welcome to my next War and Markets review. Well, a very interesting day and a lot of things to discuss today. So, what are the headlines? The headlines are that the market was broadly positive across the cap curve and across many sectors. Nifty was up about 0.5%, mid cap about 0.6, small cap about 0.7%, and micro caps about 1.4%. Advanced decline ratio was heavily in favor of advanced, almost 2:1. 1,900 stocks advanced and only about 1,000 stocks fell. So clearly this gives you an indication that today was a positive outlook towards the market. And surprise, surprise, both FIIs with 2,800 crores and DIIs with 4,000 odd crores were buyers today. So clearly a day when all the investor base, FII, DII, retail, all had looked at the market in a very positive way. If that was the case, right, the market should have risen much, much more, right? So therein lies the story, which I want to tell you, because today was also a day when geopolitically there was a bit of tension, though oil remained at 110. Post-market hours, it shifted to 114. So that's for tomorrow's expectation. I'll come to that a bit later. But the rupee continued its weakening trend and breached and closed above 95 today. And with swap points for the 1 year being at 356 points, it's showing a 4% depreciation to 98.5 or 98.6 for next year. Dollar index was strong at 98 and US interest rates continue to be on the stronger side. So with all of this situation, then why this buying today in the market? Well, domestically there was a reason and internationally also there's a reason. So what is the domestic reason? It's the election results which came favorable through the day. BJP breaking through in Bengal was a big development because, as we all know, Bengal, through years of communist rule and Trinamool Congress rule, has not been among the top performers, especially when it comes to manufacturing and engineering. And so this probably will hopefully give a good GDP boost, and probably for India's GDP also, this could be a not insignificant number, maybe 20 to 30 basis points this could add because you pull up Bengal. So I think that's a very positive result. The second aspect, again, which from a market positive was most BJP NDA ruled states have bucked anti-incumbency. This is in Assam, we've seen that, and in Puducherry also, right? The result in Tamil Nadu was, of course, a surprise, but perhaps a pleasant surprise because it showed a break from tradition of supporting either of the two Dravidian parties, but market-wise it was not relevant. I just covered it in the context of my election discussion. But obviously, the BJP retaining Assam and winning in Bengal were the two big things which gave a positive tilt to domestic investors that India's growth-oriented, business-oriented government, as it has been perceived over the last decade, will continue and its effect will be felt on all the poorer growing states, which is West Bengal. So I think that was a domestic positive. From a foreign investor positive was what? I would say is by and large that the earnings season as it spanned out hasn't looked too bad. That's one. Second is FIs after the relentless selling of March and the first week of April have eased their selling and are tilting towards buying because I think the discounting of the oil price at $100, $110 into the earnings, I think by and large has been calculated and done. And now they are at the margin in terms of how they developed. So today that's positive. Plus also bear in mind that today some of this FII positive inflows could be short covering on the stock futures where they would have shorted it. So if they had shorted some of the stock futures, then if they had covered, they have to buy the stocks in the market. So that could occur. We can never know the difference between that. So anyway, there was no selling pressure from the FIs. That much is very, very certain, right? So then if you then look at it and say that why have these smaller caps done better than the larger caps? The story lies on the way DIs are behaving. The DIs, though they bought 4,500 crores, are probably selling the large caps. When FIs come to buy the large caps, they are getting rid of their large caps and are diverting their money into the smaller end of the cap curve. Because all these days, when the FIs were selling in the month of March and the first week of April heavily, they were selling the large caps and DIs had parked the money in the large caps because when the earnings season comes, it's easy to liquidate a large cap because of the large free float there without impacting the price. So that's why today, despite heavy buying by both DIs and FIIs, you saw the large cap index moved up only 0.5%. In fact, at a media interview today, they asked me also, why is the election result not really strong bounce in the market? Well, it's because the DIIs were stocked up on. And so then when you look at the sectoral indices, you'll realize that some of the large cap oriented sectors, that is private banks, PSU banks, and IT, were the underperforming sectors. So clearly there was a lot of profit booking, I suspect mostly by DIIs in that. The banking related profit booking was one because the PSU bank index has been one of the best performers. So there's a lot of profits there to take off. Plus the RBI ECL guidelines, that story that I played out last week is probably still going on in terms of that. They're saying, let's wait and watch and see which bank does what on capital adequacy. Right now there's money on the table. Let me book it and let me look at sectors which I'd like to buy during the earnings season. So what did they buy? Well, Realty was a standout performer by about 2.5%. It went up. It was because two big developers announced a lot of buying interest in two projects they launched, I think. And it was more of that and maybe some bit of short covering, right? But otherwise, most of the areas which were up only around 1%. So it indicates a lot of rotation, and retailers also participated. Otherwise, micro cap index wouldn't have been up 1.5%, right? So that in essence sums up the day. Now, just to sum up for tomorrow, what to look for? Well, post market hours, oil has spiked up to 114. So GIFT Nifty currently is trading in the negative. So from a perspective of that, tomorrow right now looks to be a weak start, because today, whatever little euphoria related to election, which will go away by tomorrow, because that event is no longer an event, right? So I think tomorrow we've got to be again cautious. Earnings will again drive it, because the escalation happened was that Iran claimed that they have sent two missiles and attacked some US tankers. America has still not accepted that and they've denied it. But America on its own has now said that they are going to, and Iran has also announced the larger territory of the Hormuz Strait, which they claim now is under their control. Again, disputable. They have also sent a 14-point program to the US for peace plan, which the US is giving mixed voices on. And US is also kind of saying that we're going to step up, we're going to help guide more vessels out of the Hormuz Strait. So a lot of action on the geopolitical front, but which has led to a marginal oil spike to $114 from about 110. But this is still looking like saber rattling, as they say, but that nervousness will continue. So a good day today. Tomorrow is a new dawn, and like I said, with oil prices where they are, and it's not just the Nifty 50. I think even the US indices are showing a little bit of pressure, maybe because of the rhetoric of the war. So it's all in the same pattern then, that broadly to say that retail are continuing to support the market by averaging out their portfolios. DIs are gradually stepping up their buying. FIs today have stepped up. Let's see whether it sustains tomorrow. But there is no evidence of any strong, even the earnings season has been decent. There's no evidence of any strong geopolitical relief or anything for FIs to come back in a big way. So I expect the market to continue this plus or minus 0.5% on the Nifty, slightly bigger on the middle small cap because of the reasons I just spelled out. So as an investor, the medium-term investor, the strategy will continue to remain in systematically diversified accumulation of sectors. That's it, right? And then look forward to my next review. Hopefully tomorrow night I will do the same. Thanks a lot.